Welcome along to Taking the Biz. You're an A-level business student. This is a channel of A-level business tutorials. Sounds like a marriage made in heaven. If you haven't done it already, think about hitting that subscribe button. In this tutorial, we are going to have a look at possibly the most important, the most fundamental topic in all of A-level business, namely profit. So, what we're going to have a look at in this tutorial is how profit is calculated, which might be a numeric question in your exam. We're also going to have a look at what firms might use their profits for. So every organization is going to generate some form of sales revenue, and they will take all of the different products that they have available, and to calculate their sales revenue, they're going to have a look at the price of the different products that they sell as part of their product range, multiply it by the quantity of each product that they have sold, and what they will then gather is what's known as their total revenue, the total sum of money they have generated from selling their range of goods and services. Now, we know firms do not get to keep all of that sales revenue because they will have a wide range of different costs that they will have to pay in order to operate and run their organization. Now, we can split these different costs into two different categories. Our fixed costs are going to be our costs that are going to remain constant. They're going to remain static in the short run, regardless of our scale of production. So it doesn't matter how many products we manufacture, or even if we don't manufacture any at all, our fixed costs are going to remain at the same level. So that might classically be things like rent, which will remain at the same rate month after month, regardless of our level of output. Might also include things like salaries for some of our clerical staff or our managers. Might even include things like insurance. These kind of costs are going to be the same amount every month, regardless of whether we produce no products at all or whether we're producing at our maximum capacity. Now, in order to calculate our costs, we've got to look at a second category as well, which are known as variable costs. Now, these are costs that are going to change or alter in relation to our level of output. So as we increase the scale of our production, some of our costs are going to rise. And if we were to reduce the scale of our production, these costs would fall. So the kind of classic variable costs that we might have are typically things like stock or raw materials. If we produce no products at all, we won't require any raw materials, and as we increase the scale of our production, we're going to have to purchase more and more stock, more and more inventory, greater amounts of raw materials. Now, when we total up all of our spending on our monthly fixed costs and our variable costs as well, it allows us to calculate our total costs of running our organization. And then, hey presto, we have got everything we need to be able to calculate the profit of our organization. So when we take our total revenue, the total sum of money we have generated from running our organization, and from that, we subtract the total costs of running our organization. That's all of our fixed and variable costs added together. It leaves us with our profit figure. Now, whenever a firm makes a profit, they then have a choice as to what they are going to do with that profit. And it can be a little bit of a balancing act. So the first use of profit is to retain it or to keep it in the organization. Now, why you might do that is because you have ambitions of growing and expanding the business next year. And rather than rely on sources of finance such as borrowing, a decision has been made to use some of the business's own profits as an internal method of raising some funds in order to fund expansion. So you might decide that retaining some of the profits in the organization might help to grow the business and potentially make next year's profits even more attractive. But the alternate use of profits is to distribute those profits to the owners of the organization. The reason why people have invested in this business is to make some form of return from it. So when the business makes profits at the end of the financial year, it is common for a large proportion of those profits to be given out or to be distributed to those owners. In limited companies, that would be in the form of a dividend to the shareholders. Now, you've got to strike a little balance between how much you're going to retain versus how much you're going to distribute to your shareholders. If you retain too much, then it may help fund expansion, but it may risk alienating and angering the owners of the organization. If you distribute too much, it might mean that the business either does not grow and improve and expand, or has to be too reliant on borrowing and has to pay back large sums of interest in order to fund that expansion. So what managers and owners of businesses are looking to do is to strike that right balance between retaining and distributing their profits. Quick topic for you: how you calculate profit, different types of costs, different uses of profits if they are made. Final thing we should also point out is that for any organization where those total costs actually outweigh the total revenue, then that means that that business has not made a profit. In fact, it has made a loss. And don't be surprised if you have calculation questions on your exam where the business may actually have made a loss rather than a profit. It may just be the examiner asking a slightly more complex form of profit calculation question. Good luck with your ongoing revision. As always, keep on taking the biz, and we will see you next time.